Hello, and welcome back to Explain the Charts, your go-to source for no-nonsense technical analysis and market breakdowns. It's September 26th, 2025, and today we are diving deep into Bitcoin, which has just experienced a gut-wrenching move to the downside, shaking out traders across the market. We're going to start by unpacking the critical news events that have fueled this volatility, and then we will jump straight into the charts to see what the price action is telling us. There is a lot to cover, from massive liquidations to institutional sentiment shifts, so let's get right into it. First, let's talk about the news, because the macro environment has been incredibly turbulent. Headlines are dominated by a massive crypto crash, with Bitcoin falling sharply below the critical $112,000 level. This wasn't just a small dip. It triggered a cascade of liquidations totaling between $1.6 to $1.8 billion across the market, the largest such event so far this year. Over 400,000 traders were liquidated, primarily those with long positions, which highlights the dangers of the increasing leverage we've been seeing in the system. A major catalyst for this downturn appears to be significant outflows from the U.S. spot Bitcoin ETFs. On September 22nd alone, we saw over $360 million flow out of these funds, with Fidelity's FBTC reporting one of its biggest single-day outflows ever. This indicates that institutional caution is growing. Compounding this is the Federal Reserve's recent commentary. While we got a rate cut, Chairman Powell's cautious tone about ongoing inflation risks has dampened investor confidence, strengthening the dollar and putting pressure on risk assets like Bitcoin. This has put the popular corporate treasury model under scrutiny, as companies that bought Bitcoin as an inflation hedge are now seeing those assets decline in value. Now, let's bring up the daily chart to see how these events are reflected in the price. As you can see, after a strong rally this summer that peaked around the $123,000 level in mid-August, Bitcoin has been in a corrective phase. The price action has been choppy, forming a broad range. However, the most important candle to look at is yesterday's, September 25th. We can see a massive red candle with a long lower wick, which represents a price drop of nearly 4% for the day. The low of this candle hit approximately $108,623, which is a critical level we'll be discussing. This sharp decline aligns perfectly with the news of cascading liquidations and institutional selling via ETFs. Let's identify the key price levels on this daily chart that every trader should be watching. The most immediate and crucial support is the low from yesterday at roughly $108,600. This level lines up with some consolidation we saw in late August, making it a technically significant zone. If we break below this, the news reports and our chart analysis suggest the next major support zone is between $105,000 and $100,000, which corresponds to lows and consolidation seen back in May. To the upside, immediate resistance now sits at the previous support level around $112,000. Bulls need to reclaim this level to stop the bleeding. Above that, the $115,000 to $117,000 area, where price consolidated for much of September, will act as a very strong resistance zone. The summer high of $123,000 remains the ultimate target for any long-term bullish reversal. Before we zoom into the very recent price action, let's quickly look at the hourly chart from earlier this month to gain some context. Here we can see the price action from September 5th to September 8th. Notice how the price was trading in a tight range, mostly between $110,000 and $113,000. This period of low volatility was essentially the calm before the storm. It also reinforces how important the $112,000 and $113,000 levels are, as the market spent a considerable amount of time battling over this territory before the recent breakdown. Now let's switch to the 15-minute chart and zoom in on the action from September 25th to see exactly how this crash unfolded. Here, we can see that the price was holding relatively steady above $113,000 for the first part of the day. Then, the selling pressure began to mount, and we saw a sharp break below that support. Notice the increase in volume on these red candles as the price cascaded downwards. This is the liquidation cascade in action, where falling prices trigger stop losses and margin calls, which in turn creates more selling and pushes the price down even further. The descent was rapid, slicing through the $112,000, $111,000, and $110,000 levels before finally finding some temporary footing below $109,000. Currently, the price is attempting to stabilize, but the short-term trend is clearly bearish, with lower highs and lower lows. So, what does this all mean for the immediate future? Let's discuss the bullish and bearish cases. For the bulls, the argument rests on the $108,600 support holding firm. A strong bounce from this level, followed by a reclaim of $110,000 and then a decisive move back above $112,000, would be the first sign that the worst is over. If we see spot ETF flows turn positive again and a stabilization in the macro environment, a relief rally towards the $115,000 resistance zone is possible. Some traders are talking about October, a seasonal narrative where October tends to be a bullish month, but this is pure sentiment and not a fundamental driver. The bearish case, however, currently seems more probable given the technical damage and negative news flow. If Bitcoin fails to hold the $108,600 support and we get a daily candle close below it, the door opens for a much deeper correction. This would likely trigger another wave of selling, with technical targets at $105,000 and potentially even a test of the psychological $100,000 level. Continued ETF outflows would be a major confirmation of this bearish scenario. To recap, the key levels to watch are critical support at $108,600. Below that, we're looking at a support zone from $105,000 down to $100,000. Key resistance is at $112,000, then $115,000 to $117,000. So here are my unbiased predictions. I believe there is a 60% chance of further downside or consolidation near the lows. The break was significant and driven by real selling pressure, so an immediate V-shaped recovery is unlikely without a major catalyst. A retest of the $108,600 low is highly probable, and a break below it could target $105,000. I'd assign a 30% probability to a period of choppy, range-bound price action, likely between $109,000 and $112,000, as the market digests this move. Finally, there's a 10% chance of a sharp, bullish reversal. For this to happen, we would need to see a very strong wave of buying, confirmed by a swift reclaim of the $114,000 level on high volume. The main things to watch in the coming days are the spot ETF flow data, which is a great gauge of institutional sentiment, and any upcoming inflation or employment data that could influence the Fed's next move. That's all for today's analysis on Explain the Charts. This is a critical juncture for Bitcoin, so trade carefully and manage your risk. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and let me know your thoughts in the comments below. As always, this is not financial advice and is for educational purposes only. Stay safe, and we'll see you in the next video.